In this video, traders, we're going to look at, does support strengthen or weaken after multiple touches? Hey guys, warm welcome to you. So I'm going to give you a definitive answer in this video to the question of, does support and resistance strengthen or weaken after multiple touches? But I'm going to give you some food for thought so you can make your own decisions on this. Right, so this is the age-old question, right? Some people are firmly in this camp, it's like, hey, as soon as support is hammered, the more times it's touched, it means that the more likely it's going to break, because it's like a battering ram hitting it, weakening the wall, and eventually that wall will break. And then the other side of the camp, you've got guys who say, no, every time support is touched, the more it holds, the stronger it becomes. It means that it's a stronger support. It means that more people are dealing at that level in a counter trend environment and a counter trend position, and it's going to hold. So which side of the coin is it? Now, I like to, as you may well know if you're a subscriber, I like to look at things in the bigger picture. I want to look at not just the metrics of it's touched it 4 times, it's touched it 5 times, hence 5 is weaker or 5 is stronger, but looking broader and taking that into account. This is a pure price action approach. It's worked for me, and I hope that this will help you guide your trade. Because ultimately, guys, listen, isn't it about this? The market is coming to this level. Are we going to buy it? Are we going to leave it? Are we going to sell it short? That's it. Key levels are a big part of this business. Do we want to fade them? Do we want to trade the breakout? Do we want to leave it alone? So anything we can do that helps us understand well, the likelihood of this holding or the likelihood of this breaking through is massive. So there are other things to take into consideration when we're looking at support. And we're going to use support in this example. We'll obviously flip on its head for resistance. Now, the big one is, what is the trend doing, right? The biggest thing is, what is the bigger, higher time frame trend? Now, it's so simple, and we talk about it loads on the channel. Other people talk about it. You've seen books and all this stuff, the trend is your friend. But it is, because if the support is with the trend, i.e. we've seen this before, if you've subscribed, by the way, appreciate support. Thanks a lot, guys. But where are we? Can you hopefully see on this video? We can, right? If we have this scenario and we come down and we have the support in an uptrend on a pullback, then we have a scenario where that support is likely to hold because we're in an uptrend. It's a support in an uptrend. Resistance in a downtrend, support in an uptrend, likely to hold. Flip it on its head. Support in a downtrend, less likely to hold because that would mean the end of the trend. And the end of the trend only really happens once. It might hold for a little bit. Eventually, it's likely to break in a trend. So there's that bigger picture. But going back to this, does the amount of touches strengthen or weaken it? So when we take that into account, let's have a look at this. So we've got 2 scenarios here. Okay, we've got number 1 and we've got number 2. Now we've got number 1 where markets come down. Forget about what's happened beforehand for now. Let's just look at this. So we've got 1, 2, 3, 4 touches. And in scenario 2, we've got 1, 2, 3, 4 touches. In fact, these are, I'm going to highlight these as touches, guys. That hasn't quite touched. That's a touch. Okay, so we've got the same number of touches. But which one is the stronger support? Now, in my opinion, all else being equal, this is stronger support. Why? Because as we've tagged that, and we always look at, I like to look at things in supply and demand. If you're into price action, make sure you are subscribed because we've got some really good stuff coming up on that. But supply and demand, and how many times have I done this seesaw analogy in the videos? But hey, it's good because supply demand, we've got demand coming in, demand coming in, demand coming in, if we're in a case of resistance. But in this case, we're talking about supply hitting the market. Then as we hit it, it pivots to demand. Okay, demand comes in, which we could say are buyers. Now, for every buyer, there's a seller, so we can't oversimplify that, but let's do it just for now. Buyers are stepping in at that point, and we're seeing sellers backing off and the supply-demand imbalance shifting quite significantly because we've got quite a big bounce. Same again as we come down here. Yes, it only bounced halfway before coming down. That's real world movements, guys. The interesting thing is that it's when it appeared, or when it came to this level, this support level here, the market went, okay, that's value. Buyers considered that as value, stepped in and pushed it back up. Now let's compare it to this scenario here, where we've still got the same amount of touches, 1, 2, 3, 4 touches. However, in this scenario, the bounce back up in number 1 was almost similar to that, maybe not quite the same order of magnitude, but we had a bounce back up. But then ultimately 2 and 3, the market decided that there was no distinct value, or buyers didn't perceive that as good enough value to step in much above this kind of high here. They stepped in a bit, but then you had the combination of sellers still thinking that was good value for them, but buyers not really, and no one or the other side really stepping up to the plate and driving it higher or driving it lower. Now, to me, this is a weak support, because the amount of times the market has spent near that support level, in my opinion, and this isn't always right, and there's loads of different kind of variables that are into this, but if we just looked at it subjectively, my opinion is, if the market is sitting near the support level or resistance level, the likelihood of it breaking through is higher than if it's bouncing off cleanly. Now, of course, do breakthroughs like this happen? Yes, they do. They happen all the time. Do things suddenly reverse from that? Yes, they do. They happen all the time. But all things being equal, I think that this is more likely, because of the downward pressure and because of the fact that buyers aren't that keen on it, they're not stepping up that aggressively, that you will see that support break. Then in this scenario, the likelihood is that this will bounce, because we have seen some indication of buyers, and we're always looking for something under that bonnet or under the hood. If you're across the pond, we're looking underneath into the engine bay and saying, okay, what's actually happening when we're getting tests? When we're getting tests like this, we're getting good buyers coming in. Now, this is not the greatest example, because after that spike to highs above that high, we've dipped lower. But if we had, let me just make this so that it's right, if we had like a similar kind of high, okay, we had that scenario, that is more likely to hold, because buyers are perceiving it as value. Sellers don't think it's that great to keep selling it lower. Whereas this, we don't have that. We've tested, we've said, hey, buyers, look, this is cheap. Do you want it? They've gone, not really. I'm not that interested in it. It's just sat there. Now, okay, well, you said that with all things being equal, there are some variables, like if that was at lunchtime, would I take that? No way in a million years, because that might just be sitting there because there's no volume being done, in which case just avoid it like the plague. If it's sitting there because there's no transactions being done, then that's irrelevant. If it's sitting there and it's hammering away and you're getting big volume spikes because there's a lot of buyers and sellers actually doing stuff, but that's an agreed price, then now we're talking. That is more likely to break. Similarly with this, you know, if we've got volume coming in on the breaks up and it's good flow, that's fine. Low volume might mean no participation. And low volume, don't forget, guys, means that it takes less for the market to move. Because if you're in a low volume environment now, okay, then you can suddenly come in and you treble the volume, which might not be much if that's low. Let's give it a number like 5. We treble it to 15. We can move the market with that. Whereas if it's currently running at 500, then we've got to suddenly come in and put way more in to move it, if that makes sense. So all things being equal, that's stronger in my eyes. And obviously when we take the trend into account. So we start to put it all together. If we're in an uptrend, support in an uptrend, and we're seeing this type of scenario, then we're looking like the most bullish scenario. If we're in an uptrend and we see this type of scenario, we're still reasonably bullish because we're in an uptrend. Don't forget, we're aligning ourselves with the trend. However, maybe we want to wait and see. Let's get rid of this one. We want to wait and see what happens on a break first, because it's not quite as strong as this. We can't quite stab at it. I wouldn't personally want to stab at it right on that support. This one I would. If we come up for an uptrend and we're coming down into this, I'd have a nibble at the support level and go, okay, it's held, it's giving you a couple of shots at it, let's have a nibble long, let's put a stop wherever it may be. This one, however, if we come up, we pull down, we're holding near the support level at lows, we dip below the low, I would wait to see that we dip below that low first before I had a nibble. I wait to see what the actual response was. If we nip back up, then I'd have a go and I'd have my stop there. If we're in a downtrend, then obviously, you know, if you look at the end of the trend, to me, that's not going to be the end of the trend. That's more than likely just going to carry on pressing through because of the pressure on it. This may be, depending on obviously other variables as well, but in other words, this is stronger to me than this, but there are other things we've got to take into account. We can't dismiss those, but if we're just isolating these, then that is my opinion. What are your thoughts? Comments in the comment section below. If you like this kind of stuff, thumbs up appreciated. And of course, your subscription is too. Take care, guys. Bye-bye.